Hello and welcome to ETBFSI and ETCFO.com by the Economic Times. My name is Amol Dete and you're watching our special Union Budget 2026 episode. This is your most influential show that we are running for last 5 years, specifically on the budget expectations. We bring top leaders to share their views because we believe the government listens. Join us live every Wednesday this month. You can watch this episode live on ETBFSI.com, ETCFO.com, YouTube, LinkedIn, and Facebook. More importantly, do share your questions also while the show is live. So let me begin the speaker's introduction first. My first speaker for this particular panel discussion on the budget expectation is Mr. Janak Raj, who is the former RBI ED Senior Fellow at CSEP. Janakji, glad to have you. My next speaker is Aditi Nair, Chief Economist, ICRA. Aditi, glad to have you. My next speaker is Mr. Tapan Singh, MD and CEO, Bajaj General Insurance, Chairman, GI Council. Tapan sir, glad to have you.
My honor, Amol.
Thank you. And my next speaker is Mr. Akshay Mehrotra, co-founder and group CEO of FIBE, which is an NBFC or a fintech company, we can call it. Akshay, glad to have you.
Thank you, Amol.
To begin with, on the economic front, I will have a lot of questions to you, Aditi, but we'll try to understand the financial conundrum specifically with the economy right now. To begin with, let me shoot one basic question to all of you. And that basic question is, what is it that you think the finance minister should do on the 1st February 2026 when she's announcing the budget? What is it that you would like to hear? I would start with you, Mr. Tapan sir.
Well, thank you, Amol. So I think I'm an insurer, and I always say that while we look at the budget and we look at the growth and we look at how the economy is growing and how things are going, we should also equally focus on what we are losing out. It is like when you have a bucket and you're putting in water and there's a leaking bucket, then even if you are putting water at a very fast pace, still it slows down. Let me put one thing which is very clear. If you look at MSME, I think a lot of work is happening on Make in India. A lot of work is happening in giving benefit to MSME to start building up, growing, becoming powerful. And today also, if you look at for the India's economy, they contribute nearly 30% of GDP, 36% of manufacturing output, and 45% exports. And they employ over 12 crore people. But they're the most vulnerable ones. Do we know that about 90% of them, the SME and MSMEs, are not covered? And when a catastrophic loss happens, 25% of them go bankrupt. And the cost of this catastrophic loss to the growth of the country is 2% of the GDP. Just to give you some context, if I look between 18 and 22, the total catastrophic loss that happened was $33 billion, which was uninsured. So one thing, if we can also make part of budget and request to the Honorable FM would be to come out with a national MSME protection scheme, which ensure that every MSME is covered, and the 25% of them, when they go bankrupt and a loss like this happens, it causes the growth of the country to come down. So we're happy at 6 to 7, we're actually growing at 9, but 2% we lose because of this. That should be something which is top of the mind that I think of. The second, which I'm very happy to note, and I think in the previous editions, Amol also have mentioned, that every Indian should be covered for health, which is something which should be there. I'm very happy a lot of state governments are covering every citizen of theirs in terms of the health cover. I'm also happy that the government came out with over 70 now. Now, a small portion still remains. Now, for that, I think what we can do is make it mandatory for every employer to cover every employee. And it's not a new solution. Countries like US have that. And secondly, let's say somebody says it's expensive, they can actually log in and contribute to the state health insurance scheme, which is reasonably priced at that. But ensure that every citizen of India is covered. We may become the 4th largest economy of the world, but we should also look like the 4th largest economy of the world. And these moves go in a big way in getting that done. So top of the mind, these two, which has big impact in terms of our country and the growth is happening about.
No, certainly, I think those were really meaningful thoughts, and not just specifically from the customer or the Indian's perspective, but from the business's perspective as well, specifically for MSMEs and SMEs. Thanks for adding that. Aditi, let me come to you and listen to your wish list.
Thank you so much. So this is going to be a very interesting budget. There are three sort of things which are going to change in this budget as compared to earlier years. First, we're going to be moving to looking at the debt to GDP ratio for targeting fiscal consolidation and moving away from explicit annual targets for the fiscal deficit to GDP ratio. And also, we have the Finance Commission's recommendations which will be coming in for the next 5 years. So that is going to have an impact on the center state fisc and the kind of space which is available, the revenues, how they're distributed, etc. And third, the denominator might change. So the GDP is going to move to the new base now. And with that, the denominator that we use for all the fiscal matrices is going to change. So I think this is kind of the context in which we are looking at this budget. And in terms of wish list, definitely I would like to see that as much space which is there, fiscal space which is there, gets prioritized towards capital expenditure.
Uh, yes, meaningful one, Aditi. I think it's nice to know that this year people are thinking that it is going to be an interesting budget. In fact, that's what you said. Because earlier people would say that it's a do or die budget, it's an important budget or something like that. But it's going to be an interesting budget. Let's hope that. Janak sir, let me come to you and take your views.
Yeah, thank you more. Let me be little provocative here, and I don't know whether finance minister will meet my expectations or not, but let me raise one or two crucial issues.
Sure.
We are living in a technology era, and the AI is shaping everything. So if we had to move forward and catch up with other, uh, emerging markets and, developed nations, then we need to focus on innovation-led growth. So in this context, I would I would expect FM to focus on two things. One is on developing human development, and second is on focusing more on research and development. Let me give you
Right.
some ideas. See, we have all along focused on physical capital, and we have relatively neglected the human capital. If you see our expenditure on health and education, it's very small. It's for last we did some study and found that health got public spending on health for 30 years remained at 1% of GDP. Only in the last few years, it has increased to 1.3% of GDP. This is mainly because of the some states have increased their health spending. But the central government for the last 3 years has kept their spending on health unchanged at 0.3% of GDP. Same is the case of, and by the way, our target was to achieve public spending on health 2.5% of GDP in 2025, and we are still at 1.3% of GDP. Now, let me come to education. We had to fix a target of 6% of GDP, public spending on education to 6% of GDP way back in 1968, National Education Policy, and this target was to be achieved in 1986. And 40 years down the line, we are still less than 5% of GDP. And again, many other countries they spend much more on education than what we do. Our human development index has improved in the last 20 years or so, but we are still way behind many of our peers, and we need to catch up. My second point is about the research and development. Our spending on research and development is just 0.7% of GDP as compared to the global average of 1.8% of GDP. Many countries, even BRICS countries such as China, Russia, Brazil, they spend much more than what we spend on research and development. The government has taken two very good initiatives in the last year or so. In 24, I believe, they set up one Anusandhan National Research Foundation, and in 25 they also set up, I think, research development and innovation scheme. I know these are very good initiatives, but amount allotted in RDI is just like 1 lakh crore, which is to be spent over last 5 years. I think we need to increase this spending, and it's only then we can try to catch up. I'm not talking in terms of size of the GDP, but in terms of per capita income. Only if we
Right.
increase spending on human development as well as on research and development. I'll stop here. Yeah.
Okay. This was a highly relevant point, Janak sir. And I think the kind of situation that we are seeing, specifically education now, that for the millennials or the young parents, education has become unaffordable for a lot of people, specifically in urban cities. And I think that's where the government lot of focus on education. R&D, obviously, no doubt about it, and the most integral part for the economy. But thanks for highlighting that. Let me come back to you on perhaps more detail. But let me bring
Sure.
Akshay here and take his views specifically on the wish list. Akshay.
So I think, see, India is really about two large flavors where we saw the Modi government focusing on. One was building the startup and the MSME ecosystem so that new ways of creating industry, jobs, and leadership in them can be created. If I look at the last few years, fintech has emerged as a large opportunity area and really build out how that impacts large consumers and as well as large economy contribution. If I look at my two asks, I would say the first is how do we really use the startups and opportunities to really work more on AI? Today, there is no AI infrastructure work which is happening. Majority of the work is happening on IT services, not
Yeah.
really providing for digital infrastructure using AI, which we are falling far behind US, China, etc. And is there a way that government can infuse more efforts there to gain the answer? The second, I think the market is really looking forward for more disposable income creation opportunity for consumers. We saw with the GST opening up, it really created a very good Diwali season coming in, and we have seen the economy improving since that time. And we are seeing every single aspect of spending is going up. India is on the brink of consumerism. The more you bring money to people's hand, it will allow the economy to kickstart further, and internal consumption can actually compensate for the global risk which is emerging. And I would urge the government to create more focus on creating opportunity to create more disposable income for the consumer.
Okay, I think that's a great ask. I think let all of us have more money in our pocket. If government could help us with that, nothing like that. Thanks, Akshay. I think for those points. So now let me get into some specifics. And Tapan sir, I will come to you. But before that, I would urge my readers and viewers, if they have any specific questions, please question on any platform that you're watching this particular show. I will take it with the speakers that I have here with me. Uh, Tapan sir, I think on the consumer part, you said that everyone should have an insurance, which is I think a very noble thought, and you have been pitching this thought since really long time, ever since I know. Uh, Now the government has made a plan of 2047, Vikasit Bharat or insurance for all 2047. What kind of clear time-bound roadmap do you think the government should have for that? Because announcement is one part, plan is one part, but execution is completely different, right?
Now, if you look at Amol, no, it is a combination of a lot of things. First, I'm very happy that the government has put this because you can't have Viksit Bharat without protection for all. No, it is a combination which goes hand in hand. Second, as you have always seen in the past also, and as Akshay mentioned, as the disposable income keeps on moving up, the insurance penetration also keeps on moving up because then people have assets and they have to protect themselves and they want to take care of themselves. When you move beyond roti, kapra, and makan, that is when people start taking care of all the assets that they're creating. That is going hand in hand. But insurance and government have to work together if you're talking of a protection, a social protection for every citizen of the country. This I've always said. When I say insurance, it does not mean that you have to give insurance company the money. Let's say if a state government keeps the money, runs by trust also, I'm perfectly fine with that. But the endeavor that anything that can go wrong, no, let us say we are having a housing boom. You're talking of low housing creation, and there's a lot of focus on that. Now, when a catastrophe happens, and a person who builds a house after, let's say, working hard for all his years and is in the 60, 65 years of age, when he's getting beyond his working age, then all his asset gets washed away one night. Where does he go?
Right.
How does he build it
Yeah.
again? So I think the point is we are focusing a lot, which we should, in terms of how do we take our nation forward. At the same time, we should have equal focus on what's going wrong and how do we plug that, as I've said that, no, which is there. Now, when you combine these two together, it's a crop insurance. When the government came out with crop insurance, 25% farmers have cover of that. Now, we should move to the next level now. How do we take it to 50%, then to 75%? How do we cover every farmer? Because there's a clear correlation. Wherever you have good implementation of crop insurance, the farmer suicide rates have come down. No, so the social impact of when you start protecting it at that level is huge. No, like I said, health for all. Okay, there'll be friction. How do you put that together? How do you reach a state? or all SME and MSME to be covered. How do you reach that? All homes to be covered, no? At least for the catastrophic losses, no? Don't worry about the entire layer of it. But the basic coverage, which really upsets and puts people completely below poverty line, or becomes a huge issue. Because what we should see is when an incident happens, let's say a catastrophic incident happens, 100 rupees is lost. How much can the government plug in with all their 6-7
Yes.
rupees? How much insurance company plug in? 5-6 rupees. But
Yeah.
80-90% of the money is gone. No?
Yes.
And you don't really have to spend a lot from the government exchequer for this. It's a question of pooling resources together. It's a question of how do you come out with solutions together. And that's what insurance companies are good at. Combine that together, puts it out. And you know how the insurance industry works. It is not localized. It is how it's a network global, which comes into play. And how do you put that network to use for the country is what it has to be happening. And my personal belief is, to answer your question, it will happen before 2047. I think the way India is progressing, the way we're moving ahead, I think it should happen by 2035 or so. In my view, 2035, 38, you should be reaching the target that we have for insurance fall. But yes, very close collaboration with the industry and the government, and taking it one piece at a time and solving it together will lead there.
Yeah. Interesting thoughts, sir. I think I have some more questions, but I will come to you a little later. But I'm hopeful that we achieve this goal before 2047, as you said that. Aditi, let me give you a scenario here. I mean, you obviously said that denominator might change. Government was worried about fiscal deficit, but I think the 4.4% target, which is more likely, I think they're going to achieve it this time. Because of the GST rationalization and other things, I think there could be some shortfall of 0.5 to 2 lakh crores of revenue is what I have been listening from the experts. How do you think under these circumstances government's expenditure will be? What do you think government? How do you think government will look at the whole capital expenditure part this particular year?
Sure. So you're very right. We've had two major rounds of tax rationalization in the last 1 year. First, we got the personal income tax related changes. And after that, what we felt was that the budgeted target for growth of this tax revenue seemed to be a little ambitious. And that seems to be turning out to be the case, because the actual growth in personal income tax collections has been lagging what is required in the budget. So that is one area where we expect that there will be a shortfall. And the second is in GST. So again, the GST collections, a couple of different actually aspects over here. One, of course, after the rationalization has been announced, the tax rates have come down, and even though volumes have gone up in many sectors, there is likely to be an impact on the tax revenue growth. Second is on the cess collections, which had already been very sluggish this year. This is the GST compensation related cess, which is anyways due to be wound up pretty soon. And the third, just a technical point, when we look at the detailed monthly tax revenues, there seem to be some settlement on account of IGST, which is also reducing the overall GST collections for the government of India. So we expect that on the indirect tax side also there will be a shortfall this year. And about 1.2 trillion is the kind of shortfall we're expecting on a net basis for government of India, after we set aside the devolution to the state governments. Non-tax revenues, however, have been growing very well. We got a higher than expected dividend from the RBI, and perhaps some of the other PSUs also we could expect the dividends to be quite healthy this year, looking at how commodity prices have moved, etc. So we expect this to take care of a part of the shortfall on the tax side. And on the expenditure side, when we look at the non-interest revenue expenditure of government of India, that has actually grown very, very slowly this year. And here we think that there is potential for a lot of savings in a sense. We think a fair amount of money would be unspent against the budgetary allocation on the non-interest revenue expenditure. And I am actually hoping a little bit of that can be pushed towards the capital expenditure in the last quarter, so that, we push up the number over there. Overall, I do not expect there to be any material slippage. We do expect the fiscal deficit to remain at 4.4% of the current GDP as per the current pace.
But what is your estimation or observation, Aditi, considering the background of this government, which has increased its expenditure on various aspects, whether it's social, whether it's infrastructure quite aggressively. Do you think that the government will also follow the same path, which is partly populist path? Do you think so?
So I want to stay away from the word populist. I'm simply saying that as compared to what was budgeted for this year, the growth in many ministries seems to be on the lower side. I can
Hmm.
only speculate. I think it may be partly because we've been moving to the SNA Sparsh
Hmm.
just-in-time system of release of cash for various schemes. So
Hmm.
perhaps it is better cash management, which is actually reducing the outgo as compared to what was anticipated at the time of the budget. Secondly,
Correct.
even over a longer period of time, if we look at budget estimate plus supplementaries, the actuals are always lower than that. So sometimes,
Correct.
expenditure forecasting, it's not always very easy to be super accurate, right? Like there do tend to be variations in expenditure as compared to what was budgeted. And especially
Hmm.
many schemes are demand driven. If there is demand, there will be an outgo. If there is lower demand
Right.
for whatever reason, the outgo will be lower. Similarly, on
Yeah.
subsidies, depending on how the commodity prices evolve, etc., the amounts could be different. So typically, we do tend to see savings. That's just the word we use for budget plus supplementary minus actuals.
Right.
They tend to be savings that are found every year in the budget, and I think that's a trend that may continue this year as well. Looking at how the numbers have moved for the first 8 months of the year.
Noted, noted, Aditi. Janak sir, I think the biggest challenge that we see in the industry currently is the private capex. Uh, RBI has reduced 100 BPS point repo rate. There are various alternatives available. The government has pushed a lot of public capex, but still the corporates or the industry is not being aggressive in terms of putting up plans or going ahead with private capex or even accessing the loans. In last 1 or 2 months, we have seen slightly pick up, but again, it's not as good as we should highlighted it. What will encourage the industry to move and focus on manufacturing, and what is it that the budget should do specifically on this particular aspect? Because until and unless the private capex won't up, until and unless the industry will not put up their plants or expand, I'm sure the job growth will not happen, and perhaps manufacturing growth will also not happen.
Uh, Thank you, Amol. This is a very interesting question. So let me just go back.
Hmm.
If you go back and look at the data starting from 2008 onwards, 2008 was the peak of the private capex cycle. When
Hmm.
the private capex, the gross fixed capital formation was something like 16% of GDP. After that, we did some study and found that there was a structural break in private capex in 2012. And after that, the private capex has slowed down significantly, and we found two three other interesting things. One,
Hmm.
we found that not only the private capex slowed down, that increased public expenditure couldn't crowd in private expenditure as much as it used to do in the past.
Hmm.
That means private capex is not taking place. So, if you ask me, there are two reasons for this. One, private consumption was weak until recently. Even now, it's weak. I will come to that. Though it has
Hmm.
picked up, private consumption
Hmm.
has been weak, and secondly, there has been so many uncertainties. So, to my
Hmm.
mind, these have been two factors which have held back a private
Hmm.
capex cycle. I must give credit to the government that they have done very well in terms of giving personal uh, direct tax relief to
Hmm.
individuals in the last budget, something like I think 0.3% of GDP, and they have
Right.
also rationalized GST rates this
Hmm.
year, which amounts to
Hmm.
something like 0.2% of GDP. These are two very significant measures, and these two
Hmm.
measures should help spur private consumption. And inflation was also a big factor. Inflation was very high, particularly food inflation was very high, because of which consumption on discretionary items was affected.
Right.
Now that food inflation has come down significantly, and we also know the Reserve Bank has cut the interest rates. So, and banks have cleansed their balance sheet, and the private corporate sector have also deleveraged their balance sheet. So we
Hmm.
have a combination of very very positive factors which should lead to now spurring private capital expenditure. But only negative thing is global uncertainty. And until the global uncertainty, I think it would be good if India signs the free trade agreement with the US, because it's causing a lot of uncertainty. So I personally believe government has done well to spur private consumption, and that should help to spur private capex. I would only say in this budget there shouldn't be anything negative which
Hmm.
which impacts the positive business sentiment. That's my
Right.
only hope. And I would expect government to introduce structural reform. They have already introduced like GST and the labor codes they have introduced. I would say they should focus more on structural reforms, and particularly they should focus on disinvestment. Disinvestment targets, if you see, in last several years, we have met only 2 years disinvestment targets, although the targets have been getting reduced. I would say the government should go for in a big way for disinvestment, which will not only raise revenue for the government, but it
Right.
will also create very positive sentiment. I think the government should focus on structural reforms.
Any particular point that you want to add quickly on the structural reforms, sir? Because we can have these problems, I mean recurring problems, whether the inflation will go up and down, or the inflation is quite low since more than 6 months. Geopolitical tensions will come and go. I think industry will also have its own problems and challenges, but the reality is, no corporates or no industry is going aggressive in terms of spending. So what is that structural reform that you mentioned? Any one specific point that you want to quickly add?
No, I think we have done a lot in terms of ease of doing business, but I think
Right.
this is something where we should continue to focus. And even if you see things on the ground, although the government have initiated many reforms, but when you meet industry people and the people who are doing business, I
Hmm.
think they still have a lot of complaints, and the things on
Hmm.
the ground have not changed as much as we would like them to be. So I think we should continue to focus on ease of doing business, and there is a lot of room to do lot many things there.
Certainly, I will. I will come back to your ease of doing business very soon. But let me bring Akshay here. Akshay, democratization of credit has been a major theme, and everyone is talking about it. But NBFCs have its own challenges. Cost of fund is very high sometimes. Despite RBI has reduced repo rate, the banks are not transferring those benefits to the NBFCs, and sometimes NBFCs won't be don't manage to reduce the rates to their borrowers, and it impacts on the growth. So if we have to really push democratization credit to next level, what is it that the government should do specifically on this aspect?
Amol, excellent question, and I'll answer it in 2 points, right? See, today we focus in really causing impact in lending by doing a large amount of skilling, education, and healthcare based lending. Now, interestingly, these are all impact categories and position under the ESG umbrella. But unfortunately, lending behind this, raising money for these use cases, we haven't seen the costs come down. Right, we haven't seen
Hmm.
any direct credit program which us as an NBFC can access to it. Today, we are a large focus is to really cause skilling or education or healthcare based credit to end consumer, but we are not able to get access to that capital in that manner in a reduced cost efficiency. I think that if changes could be done where, let's say, lenders like us can borrow cheaper using some government mechanism, and or pass on the benefits of ESG in this category coming to us, where we can then make it more democratic for the end consumer to borrow. That could be a large game changer. The similar example coming in is that unsecured loans carry high risk weightages, right, which creates more difficulty for us to borrow and in the market. And those rates can get revised to the older norms. It could help us expand the category. And third, I will give in the example coming in here of small instances. While NBFCs float NCDs in the market, unfortunately, TDS has to be cut by us, which makes OPEX costs goes up to manage NCD transactions. If those changes can be created where TDS is passed, the tax has to be paid by the end receiver rather than TDS deduction here, it will allow reduction in OPEX and ease of doing that business more efficiently. Right. And I would say that
Hmm.
is why and some of these triggers, when you add all three of them, I think it could give more access to capital to lenders, which can get passed on to the end consumer in a more efficient manner. I think that is the need of the hour also. We are doing businesses which cause economy contribution and end use case powering for the consumer. If we can borrow cheaper, if we can borrow more efficiently, it gives us the opportunity to impact lives of more people.
I think very valid points. While on one side the government or the regulators or the large institutions talk about the financial democratization, but I think we should also bridge these gaps, because if the cost of capital is going to be high for the NBFCs and others, not banks, then the cost will not come down. And the worrisome factor is the banks are actually refunding or returning the funds to the RBI and but not transferring it to the NBFCs. I think a very valid
Absolutely.
point.
Absolutely.
So,
I'll like to give one more use case if you allow me for a second. The example of solar rooftop. Technically, every home can today generate, let's say, 2 to 3,000 rupees of electricity from his rooftop, right? But if you look at, there's still restrictions on can you save that electricity? Can you have SOPs coming in? The import on the product of solar panels still has restriction. But it's an amazing opportunity. By a small investment by every retail household can generate 3,000 rupees of incremental income and also look after the entire country's shortage of energy, right? All three can be compensated if this entire program gets more democratized. I would say some these programs, when thought through in isolation, are very different, but when thought through as one single program, I believe that almost 10 million homes can contribute back to energy generation, generate income behind it, and reduce the power impact in the country.
certainly, noted your points. Tapan sir, let me come back to you, and some interesting thoughts I want specifically on taking insurance to the next level. So again, no matter how much insurance companies or the stakeholders talk about the need of insurance, the reality is every customer expect that one, he should get a claim easily, and second, the policy should be affordable. But the challenge between the insurance companies and hospital has been going on since more than a decade. The moment you go to the hospital, the first question is, "Aapke paas insurance hai kya?" Rather than treating the customer first, right? Do you think it's now a time that government should actually step into this and solve this problem? Because this debate has spiked up a lot, and sometimes people are also under consideration whether to go for a health insurance or just save their own money and go to the hospital, because this debate has been spiked up really long time now. Any thoughts there?
Thank you, Amol. I don't think let's not talk about insurance company and hospitals. Let's talk about a simple thing: the healthcare inflation. You know, now if you look at a treatment which cost let's say a lakh rupees 5 years back, today is costing about 7-8 lakh rupees. I think.
Yeah.
Now, when you pick up healthcare inflation and then you extrapolate it, I think we have all the finance gurus here, along with you, and you know the power of compounding. Mutual fund keeps on saying that you put 1,000 rupees a month and it turns into crores. Similarly, if the medical inflation, the way it is going, you compound that, and 10 years from now, just check as to what will it be that a common person has to pay for treatment.
Right.
Can he or she afford that? You suddenly have a country in which the majority will not be able to afford healthcare. That is the problem statement. Now, if you understand this problem statement, the government has to step in, because that's why I said it's a divergent thought when you start thinking of insurance company and hospitals. What we have been trying to do, because there's no regulator for hospitals in India, any hospital can charge any money. No, and in spite of court's ruling, you have this Kerala High Court saying that every hospital should display their rates outside. No, it's required. We also have a case going on in Supreme Court. When a lot of states have it mandatory that you walk into a hospital, you have transparent rate display of what the charges are for what kind of procedures. But no hospital displays it. It just fluctuates with whoever comes in and whoever is able to pay, and where can you put them. Now, if that is going to lead to a scenario where an average Indian can't afford healthcare, it's a government problem. It has to be solved. It is not an insurance company problem. Now, what the insurance companies are doing is, because there's no check on this, what they said was 2-3 things. First is, with the blessings of the regulator, that we shall do common empowerment. Common empowerment means that the entire industry, and last year we gave close to 1 lakh crore as claims, to hospitals. that the industry will come together, empanel hospitals on a common platform basis. Even a hospital is not being fair, is overcharging or committing soft fraud or hard fraud, they'll get de-empaneled, which means all insurance companies de-empanel the hospital, no, from a cashless
Correct.
perspective. Now, the idea is not that we have to have a friction. The idea is there has to be some kind of control on the expenses which is happening, which is going up, which is going to affect the common citizen of the country. I think that is where the issue is. And that's why the point that you said is, should the government step in? Yes, they should. So the issue here that comes in, it's a state level subject, no, and that is where you can't have a central level regulator. So regulators have to come from state level. Now we are trying to speak to the state chief ministers also to see that how do we take it forward. From industry perspective, what you're trying to do is trying to cut down on fraud. Again, you see government set up a national health exchange. All insurance companies have logged on to that, which is to ensure the claim gets paid on a straight-through basis. But hospitals are resisting coming on that, putting up the data transparently, because we want to pay claims real-time basis. Industry survives on paying real-time basis claims. If you look at the claim settlement ratio for, or let's say claim ratio for health, is over 80%, very, very comfortable, which means that the
Yes.
industry wants to pay and pay it very, very transparently. The government also set a mechanism, but the hospital not come on to board. So there has to be a body which regulates hospital, brings in transparency. When the court is saying that you have to display the rates in every hospital outside, what is the problem? Every, let's say you go to any place, you have transparency of rates. Here you don't have any transparency of rates, the time which is to be spent together. That is a bigger problem, more. It is not a friction between insurance and hospital. The friction is on the healthcare cost moving up so rapidly. If you don't rein it in, India is looking very clearly into a mega issue where an average person can't afford healthcare. And that too would be a very sad day. No, and it's already moving on. Already you have close to 8-10 crores people going below poverty line because they can't afford healthcare. And how do you address this? Is the issue which is to be talked about.
No, thanks for clarifying and giving a very realistic perspective here. And as you said, the cost of hospitalization or the medical inflation, as they call it, is going so high that on one side we have a large population coming to the urban cities, but the hospitals are short of it, and it's going to be a crazy time, I guess, in future, and we are already moving that direction. Aditi, let me bring you back and take a realistic perspective on how the government is spending look like, considering now not just sectors and segment and the need of the country where reforms are expected, but more importantly, considering the debt to GDP ratio, because the government's debt is also high. Obviously, it has gone up significantly since the COVID time. So, do you think that given the FRBM regulations or the considerations, government now will look at reducing debt to GDP ratio very aggressively and rationalize its spending, or focus more on the reform?
Thank you. So, when we look at the debt targets which the government had mentioned in the budget last year, and we look at the current debt to GDP ratio, we actually think that to get to 50% debt to GDP ratio by the target of FY30, actually a very aggressive correction is not required. We think that, pretty gradual sort of reduction of 1% of debt to GDP per year will suffice to get us there. And we think that for FY27, fiscal deficit ratio of 4.3% of GDP would be consistent with reducing the debt to GDP by 1 percentage point in the coming fiscal. So that's again a mild correction. And, I'm going to say something which maybe will not sound very nice to you or the rest of the panelists, but I think a lot has been done on rationalizing tax in the last year between income tax and GST. And I think this year is not a year where we should be expecting any more rationalization or relief coming in from the tax front. I think it's a year to sort of consolidate, really look at what we can do on the expenditure side instead. And I do think this is a year to prioritize capital expenditure for the simple reason that in FY28, we are expecting that the pay revision impact will come in. And that will have a large impact on the revenue expenditure side. So it will be difficult to push up capex in FY28. I think we'll have to probably settle with a very flattish capex that year. So possibly this year is a year when we should not be looking at too much tax rationalization and not be looking at too much increase on the revenue expenditure side, but really, set aside what is possible for public capex. with the hope, of course, that we are able to bring in more private capex as well.
Uh, Noted your points, Aditi. Yes, I do agree. A lot of things have happened in last specifically 1 or 2 years, and consolidation perhaps should be the agenda. But yeah, let's hope how the government looks at it, whether they still continue to invest heavily onto infrastructure. The real challenge that I see here is from the industry side, which I spoke to Janak sir some time back, is that government has made heavy investments through the public capex, but the private capex is still very low. So Janak sir, let me come back to you again. And you heard Aditi talking about consolidation, or perhaps government may not go very high spending. But I'm bringing this point again about the ease of doing business, which is what the need of the corporate and the industry is. If government perhaps not going to spend aggressively because they have to maintain the debt to GDP ratio, or sometimes consolidate, what are the key aspects by any chance, if you could highlight, that government should do, which will spur the private capex, which will actually push private companies to come out of their safe zone and start investing? Otherwise, the story of fourth largest economy will just remain in the numbers.
Thank you, Amol, again. No, before I come to that point, I would like to mention that I entirely agree with Aditi what she has said. She has made three very important points. Number one, you don't need very aggressive, fiscal consolidation from now onwards to reach the target of 50% plus minus 1% debt to GDP ratio by 2021. We have also done some exercise, and according to us, primary deficit should come down from 1.3% GDP to 0.3% GDP, which exactly matches with what Aditi is saying. So this means basically 0.20% of GDP fiscal consolidation broadly every year in the next 5 years. I don't think we should expect much on insofar as the relief for individual taxpayers is concerned, because government has already done enough, and it won't be good to expect more from the government. Number three, capital expenditure. If you see the capital expenditure, it has already tapered. If you see the last number, it was 11.1 trillion, and it was lower than the budget estimate. So though it was slightly higher than the revised estimate, but it was lower than the budget estimates for the 24-25 budget. So I think instead of capital expenditure, the government has given relief to the consumer, and we should now expect private consumptions to pick up. Now let me come to the point which you raised about that ease of doing business. See, for a long time there has been a demand that the government should set up national that single window system, which the government has already set up, by the way. And
Right.
but I think there are some glitches in that. Like we have seen that sometimes not all states basically have integrated with the single window system. Some states have it's still lagging. Number one. Number two, we have also seen that sometimes the servers have crashed, and many people are not aware of that there is single window system. So I think there is need to look at this holistically and see what are the loopholes which need to be plugged. And it's not only the government, even regulators also need to consolidate the regulation. By the way, Reserve Bank, if you see last year report on trend and progress, the Reserve Bank has mentioned more than 9,400 circulars they have consolidated into 244 master circulars, and then more than 9,400 circulars they have repealed. So it's not only for the government, it's also for other regulators, RBI, SEBI, IRDA, and other regulators, to ensure that whatever regulations are not required, or whether they can consolidate. I think it's also very important that there is user feedback. Like users, when they face the problem, they give the feedback,
Right.
and that feedback should be taken on board. And then I think there should be we need to expedite the dispute resolution mechanism. We know if you
Right.
judicial system how it functions. I think these are some of the things. If you plug them, I think that should help the businesses.
Okay.
And
Okay.
another thing, just one
Um,
another feature, I think there need for time bound responses from the government, like the owners to deliver timely goods and services to the businesses it should be the onus of the government. Yeah.
Hmm. Oh, sure, sure. I have received a couple of questions, but I think few of them we have already discussed. So we'll maybe take one or two with here. But Akshay, to begin with, I think we discussed this cost of capital partly in our previous question. But somebody's asking, what is that alternative for NBFCs specifically when it comes to cost of capital? Do you see more avenues for NBFCs there? How actually do you think government should help here?
So I think there are two areas here. One is I think if the NCD markets opened up when the MLD market switched off, where a large portion of customers participated to provide capital to NBFCs. And if I look at today, 30 to 40% of capital is to NBFCs coming not from banks or other
Hmm.
NBFCs, but coming from NCDs, which is retail participation in all true sense coming in. The point
Hmm.
which I want to bring in is that there is an opportunity where uh, I would say the impact side participation is still not coming in. We're seeing government spends happening on, let's say, education, skill development, digitization, but that's not trickling down to the NBFCs to get access against those categories. If there's a
Hmm.
access to those programs coming in, right, I have either
Hmm.
banks or via other government ecosystem providers for credit, that could really booster the category. Like Tapan mentioned, one important point that the cost of healthcare is becoming phenomenally expensive because of inflation and healthcare being much larger, right? But
Hmm.
today, if you look at providing either to the healthcare institution a loan or providing retail loans for healthcare, it gets more complex because the cost of capital to the end player is very high, right? If
Hmm.
that could be changed, it could really springshot that entire part, that if capital is available, then everyone can benefit and reduce that inflationary cost. I would say this is
Hmm.
where the differentiation needs to get added, and there will be more options coming in. And today we don't. Of course, the bigger point is that the dollar um, to rupee cost seems to be a large impact area where you can't borrow outside India to really manage some of those headers, which means that domestic availability of credit to NBFCs and banks need to provide for that opportunity so that we can give end consumer the benefit.
Okay. Noted your points. I think now the time is right. I have one important question to all of you, specifically on people at large perspective. But before that, maybe Tapan sir, this question we partly discussed, but there are two questions on the similar lines specifically. While we agree that the medical inflation or maybe the healthcare cost is going up, is there any way that the health insurance premium can stay normal, or basically this person is asking whether the health insurance premium could be cheaper than what they are right now, or they can be affordable.
Yeah. So that is why, if you see, initially I mentioned, Amol, that in the budget, if you make an announcement that it is mandatory for all employers to cover all employees,
Right.
just by this one, which actually doesn't cost the government anything, And let's say if some employees say it's expensive, but then they can log into what the government health scheme is and pay the premium per person which is there. See, the
Hmm.
moment you make something in insurance, the base spread larger, and you take out
Hmm.
anti-selection, the cost comes down. I think
Right.
just that one announcement in budget would bring down the average cost of premium, and maintain it at large. And secondly, also because then the payment mechanism, moves to a different level. In a way, a regulation also get empowered to handle the inflation part of hospital. So that is why when I mentioned the statement, it has very far-reaching consequences. Third, what happens is, like what Akshay mentioned, it more and more healthcare providers start coming to the field, because obviously you see a lot of money now coming here. There'll have more hospitals coming in,
Right.
more small clinics coming in, more tier two, tier three opening up, and not left to only the big chains, no, which is there. So you'll have more entrepreneurs coming up into this business, and that will actually bring down the cost. So the way to solve it is just one simple announcement, which doesn't cost the government one thing, but overall, I think that one announcement will actually bring down the healthcare cost and health premium cost also quite a bit.
Certainly noted your points. Now let me take my last question to all of you. I think we have discussed a couple of things already, but this question, since there is a differentiation the way the whole middle class and people at large look at budget and the current situation. While we all are happy, the financial analysts and the economists, that inflation is very low, GDP is growing, but on ground things are quite expensive and the inflation on ground is increasing. Maybe we are not counting the miscellaneous inflation. Education fees, healthcare, as we discussed, are still going up, and middle class is still facing a big brand because he's paying more than 50% tax if you look at direct and indirect tax together. And directly, indirectly, he's actually being facing a lot of issues. So, my basic question to all of you is what is it that the government should do specifically for the middle class? If you have any thoughts there. And Aditi, can I start with you?
Sorry, I was on mute. So I think I'm going to sound like a bit of a stuck record and maybe not necessarily say something which is going to be a crowd pleaser. But I think a lot has been done on the tax rationalization, and let's see the benefits of that flowing through in the next year. So particularly on GST, for instance, just to give you some numbers, when the government had announced the personal income tax rationalization, they had pegged the revenue foregone at 1 trillion. And for GST, the sort of revenue implications they have pegged at about 50,000 crore. But when we actually take into account the fact that the cess, the way that it was, is coming to an end, the actual benefit to the consumer in terms of lower GST that would be paid going forward is more like to the tune of 2 trillion. So 2 trillion plus 1 trillion. So 3 trillion of tax rationalization. I mean, obviously, these are estimates. But even if that's a good ballpark, when have we had 3 trillion of tax rationalization coming in a single year when we're not even in a crisis, where GDP is growing at 7.4% is the advanced estimate for this. That's my forecast as well for FY26. And if we actually look at what the official data says about consumption, if you look at the expenditure side components of the GDP, then private final consumption expenditure growth has averaged about 7% for the last several quarters. And even within this scenario, we've got 3 trillion of tax benefit coming in for the middle class. And of course, we are in a very uncertain global environment, and this is definitely something that helps. So I think, my sort of expectations of further relief from the budget at this point in time are very limited, especially because we're like 1 year away from the pay revision coming in, and that's actually going to be a pretty big fiscal stimulus as well.
Sure. Janak, sir?
No, I would entirely agree with Aditi again. I think the government has done enough. The government has done enough in the last budget as well as by rationalizing GST rates. And given the fiscal space, we need to create fiscal space to meet any challenge which may arise due to any shock in future. So I don't think, but I only have one situation. That is that no, under the new regime now, that insurance premium which we pay, we use earlier in the old regime we used to get tax rebate under Section 80D. It's not available in the new regime. It doesn't have much tax implication, but it gives a lot of relief to, since the government is not spending much on health, and people have to go to a private hospital when they go there. Before that, they have to buy insurance. I think the government should give that relief under Section 80D, even under the new regime. That's only my, this the expectation if they can do it. Yeah, but it will not have much
Sure.
revenue implication. Yeah.
Sure. Akshay?
I think I'm going to be far more positive, unlike Aditi. I believe that the consumer, the mass Indian population is wanting more tax sobs. I think there's an expectation getting built up there. They saw the impact because of the GST cut down, which happened in the festive window. We saw spending come back in a very good manner. I believe that if any more benefit can be passed on, it's going to be phenomenally good for the GDP. It's going to get consumption back in India in a very large manner. India is a very, very large economy because of surely the people here. If people go out to spend more, it changes the way the economy shows up. MSMEs, SMEs can start firing business better, retail shops run better, small businesses do better if people start spending more money. And I think Those are the need of the hour. I agree the
Correct.
government has done a lot in the last 1 year, but if they do a little bit more, I think it will just further boost the sentiment and people will start spending again.
Certainly. Tapan sir?
Oh, it's two very simple things. First is what is the basics? Roti kapda makan. There we should have a clear overview in terms of how the inflation is moving, which I have mentioned, let's say for health and hospitals. So if you look at, let us say education, the inflation of cost of education moving up so fast is not going to be good for the country. There has to be a clear overview in terms of how it moves up. Affordable housing, we are seeing how it's moving up. Health, in terms of how the inflation what affects the common person. There has to be an overview how inflation for the common person of the existing is moving up, and there has to be a cap. In fact, if you see in some jurisdiction in US has a requirement that a health insurance company cannot make more than 5% profit. I'm perfectly fine with this also, something which affects the common person. You should put this. A hospital cannot make more profit than this, or let us say education institution cannot make more profit than this. Or there has to be a very clear cap on things which causes a common person to suffer. Because if you don't do that, then we may become the richest country. But if the common person doesn't get a benefit of that, and in my view, just giving free ESOPs doesn't really lead, because I've always know the story of if you give a fish to eat, that doesn't last long. Teach somebody how to fish is regular. So the education system also has to be seen. In today's time, when entry-level jobs will take a hit because of AI coming in, are we having a education system which creates more entrepreneurs? Are we trying to also create an environment in which we create an environment in which we can have more and more entrepreneurs coming in? They are able to create more jobs, smaller jobs, and they are able to push the economy up. So I think we should be looking at these basic questions also if we want our country to be one of the most powerful countries in times to come.
I think that was a very, very important point, in fact, and thanks for raising that specifically on the health side. I think if there has to be some incentives given to the customer or the people on the hospitalization front, because the hospitals, get a lot of incentives and benefit from the government while raising up the hospital itself, because they're going for a social impact, and then they look for the huge profits by charging up, the huge fees. I think that should be, looked at. But again, I think we have come to an end here. We agree that the government has done a lot of things, including GST tax rationalization. But I think major problem that we see, because we do speak to a lot of readers, viewers, and we receive a lot of comments here, is one, I think the world has gone beyond roti kapada makan. They need smartphones, Ola, Uber, Amazon, e-commerce, and Zepto and Blinkit. That is one point, which means the spending is going up aggressively. And second, I think the education and the health inflation is going up so high that no matter how much incentives that the government offers to the customer at large, it is not sufficient. So if ease of living becomes a major theme also in the coming budget, perhaps will be a big booster for the middle class, is what I believe. But more importantly, thank you so much for taking out time and sharing those meaningful and relevant thoughts with us. Thank you so much.
Thank you, Amol.
Thank you.